Should you pay off your student loans or invest? This is one of the most common questions I get from locum professionals. In this video podcast, I go over the exact framework to help you make the most informed decision. And towards the end, I provide my exact recommendation for my clients. Welcome to the Locum CPA Podcast, where we talk about the business of being a locums medical professional. My name is Stephen Lee, a CPA based out of Chicago, Illinois. As a locums medical professional, managing your finances means making smart decisions today that set you up for long-term success. And one of the most common financial dilemmas is deciding whether to aggressively pay down your student loans or to focus on investing your income. Both options have their pros and their cons, but what's the best strategy for you? Let's break it down step by step to help you make the most informed decision. And before we dive into the specifics, it's important to start with a clear picture of your financial situation. You have to ask yourself, how much do I owe? What is the interest rate on my student loans? Do I have any other high interest debt like credit cards? And what are my financial goals, both short-term and long-term? And the answers to these questions will help shape your strategy. When you do this, you want to really, going back to how much do I owe and what is the interest rate on my student loans, you want to analyze your student loan terms, federal versus private loans, fixed versus variable interest rates, and consider options like income-driven repayment plans or refinancing those loans. I have a client that I think about right now that most recently, what we did is we really analyzed the student loans that they had, put in the principal balance, as well as the interest rate. We calculated the totals, and we started coming up with a plan for which loans we wanted to aggressively pay down first. And that's going to be the ones with the higher interest rate, whether in the 7s or in the upper 6s, right? Those are the most common interest rates for a lot of these medical loans. You have to get organized, really put them in a spreadsheet, organize them, and really decide strategically which loans do we want to tackle first and foremost. Really get organized. So you want to analyze your current student loan terms. And number 2 is the current savings and emergency fund, right? Rule of thumb that we like to give at our firm, and I like to give my clients, is have between 3 to 6 months worth of living expenses saved before making aggressive moves on any debt or investments. So you want to not only analyze your student loan terms, and before we aggressively start paying off these student loans, making sure we have an emergency fund, right? Dave Ramsey is a very famous financial advisor who says start off with $1,000. However, for most of us, we have more potential emergencies that are greater than 1,000. So what I recommend is let's start with that 3 to 6 months worth of emergency fund first before we start to aggressively pay more than the minimums on our student loans. And if you're a new or a seasoned locum professional, you don't want to miss my top tips for not only starting, but operating your locums practice. I'll pin a link to the guide in the comment section below, so you don't want to miss that. So we want to really get to the heart of the issue, why paying down student loans might make sense. Paying down debt can be a very emotionally satisfying choice. It eliminates a major financial burden and guarantees a return equal to your interest rate. And what does that mean? So for high interest loans, we want to aim for first, right? So once again, we organize not only the loan balance, but also the interest rate related to those loans. And if your student loan interest rate is above 6 to 7%, paying those down could be the best bet. It's like getting a risk-free return on your money if you think about it. There's also a mental and emotional freedom. This is probably the biggest thing. Imagine the peace of mind that you get from being debt-free, from having this huge student loan burden to really having that freedom to know that does not exist, right? So it's really worth prioritizing these loan payments, right? So that we can work on those future personal goals, financial goals that you might have, whether it's buying your first home, getting married, saving for retirement. All of these things really come into play, into picture here, right? So you want to imagine what it's going to be like to be debt-free. That's really going to help motivate you to really pay down these student loans. So not only thinking about and organizing the student loan balances, interest rates, but also remembering the benefits of paying down the student loans. that could be the big motivating factor for you. The case for investing your money. So in part 2, we just talked about what are the reasons why to pay down the student loan first versus what are the pros for investing your money. So investing early, once again, we know of that term called compound interest, right? The more time we have, the more powerful compound interest is, helping you build your wealth faster. So the potential for higher returns, right? That is the biggest pro for investing your income now versus paying off student loans, right? The stock market historically offers an average return between 7 to 10% annually. And this outpaces most student loan interest rates. Remember, most of our clients, between 6 to 7% or in the 6s or in the 7s is the typical student loan interest rate. But the return, if you invest that money in the market, is between 7 and 10% annually. Remember, this is just an average, right? This is not based on 2024 or 2023. This is a historical average. Remember, also there's retirement saving advantages, right? This is, remember in my previous videos, one of the most powerful tools that you have is to max out your pre-tax deductions, right? Retirement savings deductions. So maxing out tax advantage accounts like an IRA or solo 401k, these contributions help reduce your taxable income in the current while growing your retirement, your future retirement, or your nest egg, right? So another reason to potentially invest your income now and paying off your student loans, pushing that a little bit further down the road. And lastly, it's diversifying your wealth building, right? Investing lets you balance your debt payments while creating additional income streams such as dividends or real estate, right? So another reason why you can take a little bit longer to pay down your student loans versus investing the money now, right? So there's a lot of really good pros here in terms of, investing your money versus paying down student loan interest. So what is the recommendation, the practical, realistic recommendation that I give to most of my clients? It really is a blended approach to get the best of both worlds, right? Let's pay down your student loans and invest for your future. And so for many locum professionals, the smartest strategy is this hybrid approach, balancing the debt payments with investing to achieve both goals simultaneously. So one thing that we like to do is split your extra income. What that means is allocating, for example, 50% of your surplus income that's apart from your living expenses for student loans and 50% to investments, right? So really splitting up that surplus of income that you have left over, not only to student loans, but also to investments. So really allocating your income. And the nice thing here is if you are taking the 50% of that surplus, taking advantage of those tax deferred retirement plans like the solo 401k, SEP IRA, cash balance pension plan, that not only helps you save for retirement, but also reduces your taxable income. Remember, once again, what we're trying to do here is not only pay off your student loans, but also save for retirement. So this hybrid approach really is one of the most common recommendations that I give my clients. And once again, for everybody's situation, it's a little bit different because your goals might be different from, Dr. A might be a little bit different from Dr. B, right? So really reviewing what are your goals and what do you want to accomplish, right? In the short term and the long term, really looking at your goals and really catering our approach to those goals really is our goal at our firm. What are some practical tips to help you decide here, right? Are you still on the fence what to do? Do you want to go all in on paying off your student loans or all in on saving or investing your income? Here are some practical steps to help clarify your choice. Number one, once again, is to run the numbers. Use a student loan repayment calculator and investment calculator to compare the outcomes. And what I would say is, when you're doing that, once again, you have to be organized, right? Looking at, how much do I owe? What is the interest rate related to how much I owe? You really want to look at those things first, get organized. Number two, potentially consult a financial advisor. A certified financial planner or a CFP specializing in physician finances can give you tailored advice, or even someone who specializes in student loan repayments. They can also help. So really think about maybe potentially hiring a professional to look at that. And number three is set clear goals. You want to define what's most important to you now, peace of mind from being debt-free or growing your wealth. That's really the question that we're trying to answer here. Do I want to be debt-free or really plan for the future, grow my wealth for my retirement? So really answering that question for yourself will really help guide and dictate the next steps here. And ultimately, the best choice, between paying down student loans and investing comes down to, once again, your unique financial goals and the timeline. If you found this video podcast helpful, please like and subscribe. And don't forget to share this with other locum professionals. And if you have any questions or video ideas or topics for the podcast, put them in the comment section below. Let's make 2025 the year of financial empowerment for all locum medical professionals. I'm Stephen Lee. I will see you next time. Bye.